It's the final ethics sprint covering readings 91.6, 91.7, 92, and 93. We will cover key standards and end with tricky questions to prove your exam ready.
Yes. Now, I want you to quickly come to, before I start with standard 4 and standard 5, no, I want you to come to standard 6. Okay, all of you. We'll be completing standard 6 and then I'll be giving you a break. Again, very small. Yes. Okay, standard 6. Fourth. I'll post in a while. Okay. Conflict of standard 6 is what? Conflicts of interest. Yes. 6A, disclosure of conflicts. What is conflict of interest, guys? Principal agent problem. Okay, that the agent is having his own interests. Okay. So maybe if I am already having shares of TCS, and if I am in an advisory relationship, I am advising you also to buy the shares of TCS. Don't you think there is conflict of interest for me? Yes or no? Yes. Apart from this, if my relative is having the shares of some company, or my relative is working in that company, for which I am writing a research report, this is conflict of interest. That if I'm giving a bad research report, maybe they fire her. Okay, or maybe she's holding shares. I want that the share price should go up, right? And because of which, what I'm doing is I'm issuing a very good research report. So this is conflict of interest, all of you? Yes or no? Writing a research report for a company whose stocks you already have in your portfolio. So you will give a buy recommendation only because you want that the share price should go up and you can profit from it, right? So this is the conflict of interest, and anyone, any counterparty who is related to this should be informed. Your employer should know, your clients should know about this, okay, that there is a conflict of interest like this, and full information, full disclosure should be given to them about this, that you are having so and so number of shares or you are having this type of benefit. Okay, in the research report also, you will be giving this information that there is this type of conflict of interest. Now, members and candidates must make full and fair disclosure of all the matters that could reasonably be expected to impair their independence and objectivity. Now, I cannot independently give what? A research recommendation. Buy or sell recommendation. I cannot independently give. Why? Because I am also having a personal interest. Right? Members and candidates must ensure that all such disclosures are prominent and are delivered in plain language, communicating everything effectively. Now tell me something, that the whole research report was very nicely in English. Font size also normal, 14, 15. But the disclosure of conflict of interest font size is 2. That no one can read it. But it is disclosed, huh? Very fast. Yeah, I know. Now also during IPL, if you see the mutual fund Shahid Kapoor wala ad comes, fatafat, he will read the disclosure like this in a second. And the other, advertisement is normal. Right? Okay. Anyways, but when it's of very small font size, this is not allowed. They cannot read only. Then you can't say that I have disclosed now, but it's their problem if they can't read. No, not allowed. And second, can you just write it in some Urdu language? Font size is normal, but the language is different that nobody knows how to read. No, not allowed. Again, it should be in normal plain language, right? And you have to communicate the relevant information effectively. Are we clear? You have to disclose to all clients, prospects, anyone who is related, your employers also, about the whole conflict of interest, and disclosure must also be clearly stated. Right? The most common conflict of interest is what? Actual ownership of stocks in companies that member recommends to their clients. Yes or no? Right? So this is the most common type of conflict of interest that you will come across. Okay. Now, yes. Okay. Now see, for every client that I'm recommending to my broker. Okay. See, another source of conflict of interest is a member's compensation bonus structure. Now you tell me something which can potentially create incentives to take actions that produce immediate gains for the members with little or no concern for long-term returns for the client. Now, my manager is saying that your performance bonus, okay, or compensation will be linked to what? The gains that you are making for your client on annual basis. Now, if it is a long-term stock, long-term investment, you don't expect anything in the near future. You expect the stock to deliver a good profit in the long term, right? So definitely you will look for the stocks that are having short-term gains. So this type of compensation arrangement should also be discussed to the disclosed to the client. You have to discuss everything with your client, okay, that you are having something like this. Okay, so you have to then, give your employers enough information to judge the impact of what the conflict and take reasonable steps to avoid it. Okay, priority of transactions, we already know, yes or no, that your clients and employers will have priority over investment transactions in which the member or candidate is the beneficial owner. Yes, all of you? Yes or no? Right, so client transactions will take priority over the personal transactions and transactions made on behalf of the members firm. Yes or no? Right, okay. So now see, personal transactions will be undertaken only after clients and members have been given an adequate opportunity to act on the recommendation. So understand, today I am having a good recommendation, right, that you can buy, let's say, shares of XYZ stock. I'm giving this information to all the clients on mail. The very next moment, I'm adding those stocks to my personal account. You can't do that, first of all. So see, sometimes, what happens is, sometimes your employer is not having a very strong, policy. So everywhere you see now, these days, for those who are managing the whole pool of funds, they are not allowed to trade on their personal accounts. They are not allowed. There is a strict disclosure requirement that you are supposed to follow. But maybe my employer is not having that type of scenario. You cannot do, but some cases, yes, sometimes you can have, right? Maybe you are having, let's say, you are dealing in unlisted stocks, right? So listed से क्या फर्क पड़ रहा है? Are you getting this? Right? In some cases, okay, let's say if you are disseminating the information, very next moment you cannot add those stocks to your portfolio. You have to at least give them some chance to act. You can't say that I've just disclosed this information to you, then next moment I will trade. So give at least some couple of hours to react. Once they are given adequate opportunity to act on that information, you can trade on your personal account if you want. Are we getting this, all of you? Right? So members must not act on information about pending trades for personal gains. Okay, and then you have what? A recommendation. Now, referral fees. What are referral fees, all of you? And you get what? A fee in return? Yes or no? Right? So can you are you supposed to disclose this referral fee to your client? Cannot disclose? You should disclose now. Yes or no? Right? So members and candidates must disclose to their employer also, to clients, prospective clients, everyone, any compensation, consideration or benefit that you are receiving from or paid to others for recommendation of what the products or services. Okay, so maybe you are recommending, let's say, some mutual fund also or any other, let's say, service to your clients, and in return you are getting something. Right, so all of this arrangement should be disclosed to your clients, everyone, your employer also, everyone should know. Okay, you have to allow them to evaluate the full cost of the service as well as what any potential partiality. All types of consideration must be disclosed. Okay, even the amount you will disclose. So you cannot just say that I'm having an arrangement like this in which I'm getting something from them. Amount also you have to disclose. Okay, so then they will evaluate everything and they will determine if they want to use your service or not. Are we clear? Yes, right? This is standard 6. Standard 4, duties to employers, right? 4A is loyalty, right? So in matters related to their employment, members and candidates must act for the benefit of their employer and not deprive their employer of the advantage of their skills and abilities, divulge confidential information, or otherwise cause harm to their employer. Yes or no? So if you're sharing sensitive information to some other, let's say, competitor or some other party, right, they will also be following the same strategy, because of which your profits, your employer's profitability will come down, no? Yes or no? Right? So this is applicable to everyone. Okay, if you are having just on independent basis, if you are there into a contract, if there's a contract between you two, then you have to follow the terms and conditions of the contract. Right? Members should always place their client's interest above their interest of their employer. Right? Now see, when we say that your employer's interest will come first before your personal obligations, personal interest, right? Does this mean that you work on weekends also for your employer? You don't take a break? No. So all of this you will mutually, decide, you and your employer, that how will you be having a work-life balance, right? So everything will be personally, so it is expected that employers and employees will discuss all of these matters and balance these with your work obligations. Okay, so there is no requirement that you put your employer's interests ahead of your family and other personal interests. Okay, right now, when leaving an employer, members must continue to act in their employer's best interests until their resignation is effective. Does this mean that in your notice period, you will pass confidential information? Or you are, let's say, an asset manager. In your notice period, you are calling all the clients and saying, see, I'm going, so you better come with me. Right? There is no guarantee about the new guy who is going to replace me. Right? So please, just close your accounts here. And I'm giving you my new firm name. I want everyone to join there. You cannot do this. So soliciting soliciting clients during notice period or employment is what? So when you're serving your notice period, this is also your employment only. So during your notice period also soliciting is not allowed. Are we clear? Right? So soliciting clients during notice period is also not allowed. Only after your notice period is done, if the clients are calling you and if the clients are asking that, yeah, we want to keep our accounts with you only, and then you are saying, I'm no longer working for JP Morgan, I have now switched and I'm a part of JM Financial Services, right? So now what they will do is, if they want to come after your notice period, yes, you can call them, and if they come willingly, then it is fine. But during notice period, this soliciting is not allowed. Are we clear? Activities that may constitute a violation includes misappropriation of trade secrets, misusing confidential information, right? Okay. Your clients list. Can you share your clients' personal details with others? No, this is also a confidential information, right? Soliciting employers' clients prior to leaving. Yes or no? Right? Now, if your employer has given, let's say, a laptop to you, this is returnable definitely in the future, right? So can you take that personal laptop, like, can you make it personal? No. Okay. Right? So employer records on any medium, that is, even when you are using your own personal, let's say, laptop, cell phone, and if you are having the data of what models of your employer, okay, it is still the property of the firm. It is still the property of your employer. So it doesn't mean that this is my personal phone. So if I've downloaded the document here, this becomes my property. Okay, so even when you are using your your own laptop and you are downloading the model of the firm, your employer, this still remains the property of your employer. Are we getting this? Right now, what if, okay, I am, having a particular client list in my mind. So because I'm calling them regularly now, I have those I have my good memory. So because of which वो client के contact numbers and all is what I already have in my mind. So now is this unethical? Is this unethical? No, it is not. Okay, see, so there will be some skills also that you have gained during employment. You cannot keep it back. Yes or no? Right? So you will take it to the new firm. Right? But you cannot just see, you have learned a very good model. You know how to prepare a very good model. You cannot just do control C, control V there. Let me use this model only. वैसे भी मैंने ही बनाया था यहाँ पे. You cannot do. To the new firm when you go na, you have to create the whole model again. Even if it is full similar to your old model, it is fine. But you should be creating the model again. Are you getting this? Based on your experience and based on your memory, you have to create the new model. To the new firm you go. You cannot just control C, control V or mail the model. Are we getting this, all of you? Right? Okay. Now, social media policy. Tell me something that when I am no longer associated with the employer, can I still show on my social media that I'm working for him? No. Okay. That also you have to update. Okay. So when planning to leave an employer, you have to ensure that the social media also complies with your employer's policy for notifying clients about employee separations. So everywhere you have to change, right? Standard B, additional compensation arrangements. Now, very important, additional compensation arrangements that you have here, no? So you remember, gift from clients. What is the treatment? Past gift, it is for past performance, it is allowed. But future performance will come under standard 4B, additional compensation arrangements. Are you getting this? Right? If you're getting a gift from your client, okay, for past performance, it is allowed. Why? Because you have delivered that much return to him and he's very happy. So he's giving a small token to you in the form of appreciation. Yes. Are you supposed to take a return permission from your employer for that? For the gift that you have received for past performance? No, or mere disclosure is sufficient. But that too, at the time you accept the gift, if your employer is not available at that time, later on also you can just disclose, give this information to him that so-and-so client has given this type of gift to me. Are we clear? Okay, now see, members and candidates must not accept any gifts, benefits, compensation or consideration that competes with or might otherwise reasonably be expected to create a conflict of interest with their employer's interest unless they obtain written consent from all the counterparties involved. So you have to take a written consent from your employer in this case. Okay. So for example, if your client is giving you a gift for the future performance, right? Now what will you do? This is a conflict of interest. Why? Because you have accepted the gift. So definitely now you will favor that client at the cost of others. Yes or no? Your focus will be exclusively on that client. Okay, you want to maximize the gains for that client. So you will give priority also to that client. And other clients will be looked, you will not be given the same fair treatment, no? Right? So this is something that is not allowed. So understand, see, written consent is needed here for additional compensation arrangement, and email communication is classified, comes under written consent only. Okay. Now see, understand the difference between this and a gift. A client that gives you a bonus that depends on future performance needs what? A written consent, and this is an additional compensation arrangement. But if it is a bonus for the past performance, this will be 1B, that is independence and objectivity, and you need to just disclose this information to your employer. Are we clear? There should be no confusion between the two, 1B and 4B. Clear, all of you? Now, so responsibilities of supervisors. Tell me. So if you are a supervisor, so first of all, you should be aware about all the laws, rules and regulations, right? Because you have a team working under you. Yes or no? Okay, your work is only to supervise everything, right? Now, members must take reasonable efforts to prevent employees from violating laws, rules, regulations, as well as make reasonable efforts to detect violations. You are a supervisor, your job is to supervise the work of the juniors in your team. Okay, so and for that you should be aware of all the laws, rules and regulations. No, only then you will be in a position to take some action. Yes or no? Right now, tell me something, that when you go to a firm, okay, so you are hired as a supervisor. For the first time, you go there to supervise, right? And before you sign the agreement, you observe that the internal controls and all the processes, internal controls are very weak in that organization. So should you accept your supervisory role then? Or should you not accept? What are internal controls? Internal control is a system of checks and balance in an organization. Okay, so it's like a common sense that in an organization, to prevent frauds from happening, there should be a basic system of internal controls there. But when you go there and when you're just looking at the whole processes and you're observing everything that is going on in the organization, and also by having a word, by speaking to the management there, no, you come to know that the internal controls are quite weak, right? So in this case, you will decline your supervisory responsibility. You will accept it. See why? Because you are the supervisor, right? So if something wrong happens in the future, the whole blame will come on you, right? And organization should be having a basic system of checks and balance. Are we getting this? So you will decline the role, okay? And you will accept the role only when they are having good systems in control, in place. Okay, now my question to you is, now if I see that there are lack of internal controls in an organization, but management is assuring me that you at least take this assignment of being a supervisor, right? And I guarantee you that in 3 months I will be having a proper system of internal controls in the organization. Now can we accept? It's his choice. Okay. 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 Management is signing and giving this information that within 3 months there will be a system of internal control, right? So now can we accept the role, the responsibility? No. Okay. No, you cannot. Okay. See, what if he's giving the guarantee, he's signing, but if he does not have in the future, what if he resigns? What if anything wrong happens in the future? He has it in return, but still for the 3 months, what if there is a big fraud happening? Till the time you have those system in place, you are at risk. Are we getting this? So even when the management is signing and giving it to you, you cannot accept it. So this type of question you will see and you will beh jaoge wahan pe. That yes, chalega, accept it. But this is totally unethical in nature. Are we clear? Yes. Okay, now see, and management members with supervisory responsibilities have an obligation to bring an inadequate compliance system to the attention of the firm's management and also recommend corrective action. Okay, now read this, all of you. Yeah, so this is what you have to see. Inadequate compliance system means if there is a flaw, for example, that comes to so because you are a supervisor, your role is to detect all of this. So such things you have to discuss, you have to tell them, because it is the audit committee who is going to ensure that something like this does not happen in the future, right? But not having anything in place means you cannot take that risk and accept it. Yeah, exactly. Eventually, when you come to know, so when something will happen, you will get that information. Yeah, this is a loophole, and this type of thing should be rectified. You will bring this to the attention of the team, and you have to ensure that they are taking corrective actions also. Did you read this, all of you? Yes or no? Right? Okay, one more thing, one more question that you are going to see in exams. Okay, see, understand. Responsibilities of supervisor for 4C only. That the supervisor is having an intern. She has cleared CFA level 1 and 2 with a 90 percentile score in the first attempt. Okay, now she is very confident with the model. that the company wants to prepare. So she is requesting the supervisor to give her a chance to prepare the whole model in detail. Okay. Now, after she prepared, she goes to the senior, the supervisor. She comes to you basically, and she's saying that I have prepared this and I've thoroughly verified also. And on that basis, okay, let us quickly invest in the market. Okay. We need not, I mean, you, the supervisor, need not recheck the model. So they took a decision and they invested because she was very confident. They invested in the market and there was a problem in the model due to which the firm made losses. It is whose fault here? Supervisor or the intern? Supervisor. You failed to perform your supervisory role. Not both. So I am confident, I have done my job, so it's your job, you have to do. Even when I request you that you need not verify. Interns, why interns? Intern is an intern because she cannot be a supervisor. She is going to make mistakes and that's why she's an intern. Not overconfidence, right? You are an executive because you still don't have that much of experience. And yes, we expect you to make mistakes. You cannot blindly trust others, even when he or she is confident in nature. Are we getting this? Right? So this is also one type of question you can come across. Very good, Nishika. Okay? 4C. Done? Yes? Now, what I'll do is now we have only two standards. This is the last one, right? Standard 5. We'll complete this. I'll take GIPS also today. GIPS is very small, hardly 2 pages. Okay, please pay attention. Now coming to standard 5, investment analysis, recommendations and actions. Okay. Today you will be giving it on the portal, Aryan. PQ progress quiz of ethics. But next time there will be a Google form that will be shared with you next week. Okay. Investment analysis, recommendations and actions. Right? So investment analysis means you are doing full analysis to add the stocks to your client's account. You're taking some action and you're recommending. So in an advisory relationship, you will be recommending some products to your clients. Right? So members and candidates must exercise diligence. Tell me if you got to know something without doing research, you are recommending that product to them. Right? Yes. Right? Is this what is expected from you? The answer is no. So exercise diligence, independence, and thoroughly you have to analyze the investments. Yes or no? Well, before making an investment recommendation or taking investment actions. Have a reasonable and adequate basis. So then if I tell you that on what basis did you come to this conclusion of adding these stocks to my portfolio? I thought so. Okay, I don't know. I mean, I don't have anything as of now. You cannot give such vague answers. Okay, so you should be having a reasonable and adequate basis. Okay, supported by appropriate research and investigation for all of these things. Okay, so maybe you are checking that this is how the interest rate cycle is going to be. This is how the other economies are performing. And on this basis, I think that the bond market is going to outperform the equity market. Right, so I've added more bonds to your portfolio and I've taken this type of position. There should be full research on your side. This is what is expected from you. Okay, that just on the basis of a mere, let's say, rumor, you cannot execute a trade on your client's account. Getting this? Right? So what are you going to check? Global national economic conditions, everything, right? You will also check the financial results, operating history and all of that. Before recommending particular mutual fund or any other service, you will check the fees also that they charge. Very important. Their 3 years return, 5 years return, 1 year return and so on. Yes, all of you. If you are using a model, you have to go through what? The limitations also of that model. That only on these assumptions, this price is going to hold true. If you change these assumptions, again the price will change. Right? So before you are recommending something, you should be aware of such limitations. Are we getting this? That only on these assumptions that I've made, this particular price holds true. Yes or no? Right? And definitely you can compare also if there are similar companies in the industry, you can compare the performance if you can compare the performance for what? Valuation purpose, like the PE ratio. Right? You can just check for your company's ratio with the other companies in the market. Right? Then standard 5B is what? Communication with the clients and prospective clients. Now, members and candidates must disclose to clients and prospective clients the basic format and general principles of the investment processes they use to analyze investments, select securities, and construct the portfolios, and must promptly disclose any changes that might materially affect those processes. So what is this? Today a client comes to you. Client is saying that this much is what I want to invest. Okay. You are saying that, okay, we will see what type of products we want to add to your portfolio. Okay, bye. Right now, see, you have to at least give a basic idea of the type of stocks, the strategy that you follow. Not everything in detail that this is our valuation model. Okay, on these grounds, we are screening the stocks and we are adding the stocks to your portfolio. Your portfolio is having a mixture of bonds and equity. If there is a mutual fund also, this type of mutual fund is there in your portfolio. So all these basic things you have to communicate. Your client should not be like, your client cannot say that, I don't know only what my portfolio manager is doing. Are you getting this? So in this case, at least some information you have to give him. Okay. Then disclose to clients and prospective clients significant limitations and risks associated with the investment process. So when you are giving an expected return, you can expect 15% on the portfolio from the portfolio. This is the return, but at least discuss about the risk. Will your actual return match 15%? The answer is no. Your actual return can be more than 15, it can be less than 15. So this risk is also what you're supposed to communicate. Yes or no? Use reasonable judgment in identifying which factors are important to their investment analysis, recommendations, or actions, and include those factors in communication with clients and prospective clients. Okay, and finally, distinguish between facts and opinions. When you are presenting what? Investment analysis and recommendation, you have to distinguish between fact and opinion. Are we getting this? Right? So investment analysis. So according to my analysis, this company will give a dividend of this much in the future. Are they? It is, if it is an opinion, you have to disclose. You cannot give a guarantee. We feel that this company can give this much and accordingly the share price can be this much in the future. Okay, if it is not a fact, it is an opinion. You cannot state the opinion as a fact. Are we clear, all of you? Yes or no? Okay, see. Distinguish between opinions and facts. Yes or no? Members must communicate the significant changes in risk characteristics. So if you want to now change, add or less, let's say, different stocks to the portfolio, because of which the overall risk is going to change, then you have to communicate this to your client. Right? Members must update clients regularly about the changes in the investment process. So far you were following a particular process to add the stocks to your client's account. Now, if you have changed this, then this is also something that you have to communicate. Are we clear? Yes or no? Right? Members and candidates must inform clients about limitations inherent to investment. Two such examples are what? Liquidity and capacity. Yes or no? So liquidity means that when you want to exit, you will not be able to exit at that price. So even when you see that the market price is this, the price that you get at the time you exit will not be always equal to this. Right? So your client should know this. And what is capacity? Capacity means investment vehicle's ability to absorb additional investment without reducing the returns it is able to achieve. Right? What is capacity, guys? This is something you will be seeing in case of a mutual fund generally. Okay, now see, if a mutual fund feels that there are, let's say, not good alternatives available at this time to invest in the market, no, the mutual fund for time being will stop any new capital contributions. Why? Because even if I'm raising funds, no, I don't find better opportunities in the market. So it will be deployed to some okay opportunities that are available, which will reduce your overall rate of return. So this is also one thing, capacity. Okay, that if let's say the capacity is full, the overall rate of return can come down because there are no other alternatives available in the market to invest. Are you getting this? So they might hold on to cash, or they might deploy this cash to some second best alternative. Okay, and when you are getting a lower rate of return, it will reduce your overall average rate of return. Are we clear? So all of these basic things you should be informing your clients, right? Standard 5C is what? Record retention, members and candidates. So if you are doing full research, if you are having IPS also of your client, right? So the records. So on what grounds you have selected certain securities to the client's account. All of this research. Okay. So if this year, for this year, you had some asset allocation, you did some research. Will you destroy it in the next year? No, you have to keep those records at least for a certain time period. So for example, you know, today you're filing a rate of return, like income tax return. Today when you file your income tax return. Now income tax officer can start investigation, let's say from that point, and he has approximately 6 to 7 years to give you a notice. So minimum 7 years is the period for which you are required to keep your books of accounts. Are you understanding? Yes, for a particular year, this is how it is. Okay, that today, let's say you're filing a return for this year, 7 years tak tum expect kar sakte ho income tax officer to give you a notice. So then you have to serve the facts. No, you cannot just say I destroyed my records. Are you getting this? So that way, here also you are having what? Record retention. That members and candidates must develop and maintain appropriate records to support their investment analysis, recommendations, actions, and other investment related communication with their clients and prospective clients. See the mail, the communication that is happening on mail. Is this also a record that you are required to preserve? Yes, it is. Right? If you're asking some information to your client, whether will you like me adding these stocks, and if he's saying yes, all of this should be a record only that you're supposed to maintain. Are we clear? Yes. Now, see this. This is what we already discussed. Recreating the analysis, documentation, supporting her recommendation, and must not rely on memory created at a previous firm. Getting this? You have to recreate everything. Okay. Now, all communications with clients through any medium like emails, text messages are records that are supposed to be retained. Yes or no? Now, very important thing is here. If no regulatory standards or firm policies are in place, the standard recommends a 7-year minimum holding period. Now, the problem with students is what? Exams में एक ऐसा question था. They are saying that the analyst kept a record for a period of 5 years. Is this unethical and a violation? You are saying yes, it is a violation. But this is what recommendation? Yeah, this is a recommendation that you have to keep for 7 years. Now, what the institute asks you is that an analyst kept the records for a period of 5 years. Is this a violation of the standard? This is not, but you will still mark there yes. Why? Because 7 years nahi rakha. These, it's minimum is what is recommended, but if you're it's not compulsory. If you're keeping it for 5 years, does not make it unethical. Violation. But there, see, there will be an option. Yes, it is a violation because it is not kept for a minimum 7-year period, and you will exactly mark that income. Chalega. Because this is recommendation, 7 years. Are we clear, guys? Yes? Any doubts? Easy, right? Just quickly skim through this chapter. Take 2 minutes. All of you. Third chapter, there are so much of examples. Yes, you have to. See, if you read the standards, it's going to be very easy. You will understand also everything. But the difficult part comes with application. Yes. So when there is application of the theoretical part that you have studied, no, you will struggle. Why? Because you will feel option A is also right, B is also right, C is also right. What to take? And this part, this learning ability will come only when you are doing sufficient practice. Yes? Okay, now quickly come to GIPS, all of you. Global Investment Performance Standards, right? The last chapter that you have in ethics, because the application is having again examples only, so that you have to read once theory is done. So this is the last chapter that you have in ethics, right? GIPS. So what is this? This is itself a standard. Okay. Global Investment Performance Standard. Okay. Can you see this? Global, the term, right? So can I say it applies to all the countries, everywhere? Yes or no? Now first let's discuss what is the use of this GIPS. Why do we have GIPS in place? Okay, so now see, if we look at the financial statements of all the companies are going to be uniform. Why? Because the accounting standards are forcing you to follow that particular format. Yes or no? Now, if there is there is no specific format that the companies are supposed to follow, then don't you think everyone will have their own method of recording things? Will there be a proper comparison between the two companies' statements? There will be no comparison then. Yes or no? Right? As an investor, if I want to compare TCS with Infosys, I will not be in a position to compare. Why? Because certain items TCS is recording as an expenditure. Infosys is capitalizing the same. So the profitability is not at all uniform. You cannot compare the two, right? Similarly, from an investor's point of view, if you think no, now if you are going to, let's say, an investment advisor, A, right? He's giving you his average returns over a period of last 3 years. Now, if you go to investment advisor B, the analyst, he's giving for last 10 years, right? And he is giving a specific strategy to you that for this strategy, this much is, let's say 25% is the return that we have achieved. Someone is giving you the number before tax. Someone is giving the number after tax. So as an investor, I'm not in a position to compare the two. Yes or no? So that's why to have uniformity and standardization when it comes to what? Displaying your performance, you are having these standards in place. Okay. So now when you are exactly following, these are performance standards if you see. Okay. So today if I'm having let's say 100 clients and I've kept their accounts for last 10 years or 15 years, whatever. So if now there is a new client who is doing some investment performance related inquiry, this is the standard that you're supposed to follow to give what performance presentation. Are we getting this, all of you? Right? Now see, the problem with the company's choices before GIPS was that they were choosing top performing portfolios only to display. Definitely if on a portfolio, if I've made a loss, that client has closed his account with me, I will not show that account, I will not include it in my sample. And I will only display very good strategies to you in which I want a good rate of return also. Excluding terminated accounts, again, it's a bias, right? And secondly, selecting time periods to report that put firm's performance in the best possible light. So last 3 years data is very good, but 3 years se pehle to loss hi loss hua hai. So what I did is I'm giving 3 years return only to everyone, average returns. This is itself a bias. Yes or no? Now again, GIPS is voluntary in nature. It is not compulsory. It's not compulsory for you to follow. Then why should we follow? Because these days investors are looking for companies that are following GIPS. So if you want to bring a new investor on board, no, you will have to follow GIPS and you will have to display also your performance according to GIPS. This is what they want now. Okay. So if you don't show as per GIPS, they will not trust you and they will not come to you. Simple. So it is not compulsory, but by default, okay, it makes it compulsory. Okay, to remain and to stay in that particular, survive in that particular industry, you will have to follow GIPS. Are we clear, all of you? Yes or no? Right, so this is going to present what a standardized methodology for performance reporting that makes comparison of performance across firms very meaningful. Are we clear, all of you? Right, now you tell me something, that why are we following GIPS? Because we are managing the client's account and we are showcasing our performance to the new clients. Yes or no? Now, if I am in an advisory relationship, when I say advisory, it means they pay me a very small fee and I'm advising, you can go for this, you can go for this. Now, should I follow GIPS? It's just consulting role. I'm advising. Clients are not having their accounts with me. So in this case, is it necessary that the client is going to take your advice? No. Then on what basis will you show? So if you are in an advisory relationship, you will not follow GIPS. GIPS is only something that you have to follow when you are managing the assets for your clients. Only when you are having the pool of assets, when you are managing that particular pool, when you are following the strategy, your own strategy, and then you are supposed to report under GIPS. Otherwise, you cannot. Are we clear? Everyone with me, guys? Right? Okay. Now, these are the key components of GIPS standards for firms, component 1 to 8. Now see, at level 1, they are not going to ask you anything from this. Why? Because, see this. Have you studied money weighted and time weighted rate of return with me? So how do we calculate the performance under money weighted method, time weighted method is what is given here. Okay. So this is like a whole report. And in the whole report, there are 8 different sections. Right? And in this section is basically for calculating the rate of return. So this calculation part is what you have at level 3. Level 2, you have full standards only, repeat telecast, 1 to 7 standards and the code is what you will again study in level 2. But level 3, standards you have, because ethics you cannot have variety, no, when it comes to ethics. So standards you have, but you have more than standards, the content is on GIPS. How to calculate the composite rate of return, how to calculate money weighted rate of return, time weighted rate of return, and all of this in detail. So this part is something. So you should just know that these are what the sections of GIPS, but otherwise they will not ask you anything coming from this. Okay, why? Because we have this in level 3. Now, very important, what is a composite? Right? Now understand. So according to GIPS, you have to group what? Similar portfolios into one composite. So if I'm saying that for all of these accounts, now all of these clients, I am investing 60% into equity and 40% into bonds, and 60% into equity also, it is flexi cap for all. Right? So for all of them, I'm following what? The same approach, same strategy. So all of them will be grouped and will be a part of what? One composite. For this group, I'm having only equity, and that too entirely short selling, identifying overvalued stocks and selling them short. This is again one similar strategy that I'm following for all the portfolios. So all of these portfolios then will be a part of what? One group. Are we clear? So composite is what? Composite is basically a group of portfolios that have the similar strategy or a mandate. Yes or no? Yes, all of you? Right? Now again, okay, you are, see, a composite such as international equities. Okay, now see, a composite must always include what? Fee-paying discretionary portfolios that the firm has managed in accordance with a particular strategy. You will have only fee-paying accounts. Okay, so for example, if I'm working for my, let's say, firm, okay, the company will also have its own proprietary desk for trading. The company will not charge a fee to itself, right? So company's portfolio you will not include in the composite. You will include only the fee-paying account, and that too discretionary portfolios. Discretionary in the sense your client has given you full discretion to trade. Why? Because if it is a non-discretionary portfolio will not display your performance, no. Right? For a non-discretionary portfolio, your clients are going to call you and the clients will have your own trades. Are you understanding what is going on, guys? Discretionary versus non-discretionary. Why can a non-discretionary portfolio not be a part of the composite? Tell me. It is recommended. See, it is not showcasing your talent. No, non-discretionary. You have to take your client's approval, and your client will add some other stocks also, which is not your strategy. So non-discretionary will not display your performance, and that's why you will add only discretionary discretionary portfolios to display your performance. Are we clear, all of you? Yes or no? So a composite will have what all? Fee paying and discretionary portfolios. Okay. Can one portfolio be a part of two composites? One portfolio हो सकता है. तो फिर to average the returns of the composite, I will take a top performing portfolio, 25% returns. On this composite, the returns is negative. So when I'm adding it to it, the returns will slightly inflate. Yes or no? So it cannot be. Are you getting this? And all the portfolios should at least be a part of some composite. Right? You cannot exclude, no, the strategy is different. Why? Because it is loss making in nature. You are not adding it to a particular. So everyone should be, each and every portfolio that is fee paying and discretionary in nature will be a part of some composite. Are we clear, guys, all of you? Yes or no? Right? Now, discretion, firm determines which of the portfolio it manages should be included in the composite. Okay, so if it is a non-discretionary, not included in the composite, if the client is only placing restrictions and prevents the manager from carrying out his intended strategy. Are we clear, all of you? So then that performance is not displaying what? Your strategy, no? Manager's strategy, it does not display if it is non-discretionary in nature, and that's why you will specifically exclude it. Okay, now the last part is on the verification. Again, guys, you can appoint an independent officer to do the valuation. To do the verification of you following GIPS. So you know there is audit, right? So even when management prepares the financial statements, management will get it audited by the external party. If GIPS itself is not mandatory, you cannot make verification mandatory. Verification is also voluntary in nature. Then why will I get verified? Only because if it is verified, okay, then it will give more guarantee and it will increase the trust. Yes or no? Because verification is done by an independent officer. Yes or no? Right? So you are again encouraged to pursue what? Verification of their compliance with GIPS. Are we clear? And this is what the report says. Okay, see, in the name of the firm, this is your report. Has been verified for the periods. Okay, again, can there be partial compliance of GIPS? So for one composite, I'm following GIPS, but for this, I'm not following. No. Either it will be 100% compliance or no compliance at all. Similarly, for verification, you can't discuss with the officer that you can verify only this composite. This is not allowed. There is no partial verification. Either there is 100% verification or there is no verification at all. Are we clear? 100% work he will verify, or there is no verification at all. Getting this? Yes, all of you? Right? Okay. Now, there's one more concept on which you can see questions coming in exams, which is not given in your Schweizer's book. Okay. About the minimum period for which you are required to report under GIPS. Performance presentation. So today when you are disclosing this year's return under GIPS, as per GIPS, that these are the composites, and how do you calculate the return for the composites? Based on this. Can you see this? Composite money weighted return, composite time weighted return. Now see, if you want to display the total performance, पहले तुम composite का return निकालोगे और फिर weighted average of the composite you will take, no? Yes or no? So weighted average composite is nothing but this pooled fund time weighted return and pooled fund money weighted return. Are we clear? So this is how you have to calculate the rate of return, which you will study in level 3, not at level 1. You will get only 1 mark or 2 mark theory question coming from GIPS. Okay. Now one more thing, right? See, today if I am going to disclose the performance, I will disclose for this year performance, right? I'll calculate the composites return and I will be calculating what the overall portfolio pooled fund return. Yes or no? Okay, but as per GIPS, okay, in the initial year, okay, first year, you will report for last 5 years. or less than 5 years if you have been in existence for less than 5 years. So अगर मैंने 2 साल पहले ही कंपनी बनाया तो 2 years का दिखाओ, right? Reporting of performance. Are you understanding, all of you? Right? So if you've been in existence for a period more than 5 years, so in this year you will show, you will calculate the returns as per GIPS for last 5 years. So in the first year of reporting, you will show for last 5 years. But if you have been in existence for a period less than 5 years, you will show for less than 5 years. History नहीं है तो फिर return निकालोगे कहाँ से? Are you getting this? Right? Then 6th year, 2nd year, when you're reporting, no? 2nd year, what will happen? You will be adding 1 more year data, right? So then you will show for 6th year, 7th year, 8th year. This way you will go till 10. Okay? Once you reach this point of 10 years, then you will be reporting for last 10 years only. Getting this or not understanding? In the initial year, when you start reporting under GIPS, you will report for a minimum period of 5 years. Last 5 years का data तुम क्या करोगे? Calculate करोगे return as per GIPS for last 5 years. You will group the portfolios into composites and accordingly you will calculate the overall rate of return. If you've been in existence for a period less than 5 years, then less than 5 years you will show. Next year onwards, you will start reporting for 6th year. मतलब last 6 years, you will be adding one year return to it, data to it. So next year, what today I'm showing for last 5 years. Next year, it will be last 6 years, 7 years, 8 years. This way, it will happen till the time you reach 10 years. And once you reach that 10 years period, then you will stop. No more year data will be added. You will then start reporting only for last 10 years, last 10 years, last 10 years. Are we clear? 6th year, you will not report for 10th year. You will report for 6 years. 7th year for 7 year. 8th year, 8. 10th year, you will report for 0 to 10. 11th year, it will be 1 to 12. Sorry, 1 to 11. 12th year, it will be 2 to 12. Last 10 years, last 10 years, last 10 years. So then it will not be 11, 12, 13, 14, 15.
3 years. So it is less than 5. So it is usually first report
For 3 years
3
only.
years, then number
4, 5, 6 till the time you reach 10. Once you reach 10, then last 10, last 10, last 10 will happen. This is again a question on this. You will see in exams when you're solving on the portal also, but there is no content given in your Schweitzer books. Aryan pool fund in the sense of first you have to calculate return for the portfolio. Then you will calculate return for the composite. And then finally you will have to calculate now overall rate of return for all the composites. Okay, all of you? Easy? Yes. No. Only 5. Yes.
All the portfolios must be a part of composite. And one portfolio can be part of 2 composites. That is also right.
No. At 1 only. But it's written at least 1. Why? Because you have to put it in group. So it can't be, you can't say that I don't want to keep it only in any composite. You have to add it to some composite. But then you can't be. So what I'll do is, this composite is negative returns, this composite is positive. So one which is having some strategy of this also. More it is resembling to this composite. Some strategy of this, I'm adding to this also to make the returns look better. This is something you can't do. Right. Are we clear, guys, all of you? Easy? Yes? Right? Easy? Okay. Chapter 5 is the same. Yes. Okay. So basically in chapter 5, this chapter you are having just application, cases, examples. Okay. So you have to just read this.
We have the same consequences in the next chapter, right? Is there anything different?
No, it's not different, right? But it is given to practice more. Okay.